Hello, future billionaires. Welcome back to another episode of your favorite podcast, Invest Like a Billionaire. Today, we're doing another top of mind segment. And so these are kind of shorter topics, usually between Bob and I, where we're just discussing a recent article that we have been reading, things have been just noticing in kind of a broader economic sense, and just want to report to you more in real time of things that are going on as they're happening, and just help you make sense of all the information that's out there regarding the economy and all the things going on. So, Bob, I want to share a little bit of just some of the things you've been reading just about China, and they're actually having inflation. They're actually having potentially the opposite problem. This is the Invest Like a Billionaire podcast, where we uncover the alternative investments and strategies that billionaires use to grow wealth. The tools and tactics you'll learn from this podcast will make you a better investor and help you build legacy wealth. Join us as we dive into the world of alternative investments, uncover strategies of the ultra wealthy, discuss economics, and interview successful investors. Looking for passive investments done for you? With Aspen Funds, we help accredited investors that are looking for higher yields and diversification from the stock market. As a passive investor, we do all the work for you, making sure your money is working hard for you in alternative investments. In fact, our team invests alongside you in every deal, so our interests are aligned. We focus on macro-driven alternative investments so your portfolio is best positioned for this economic environment. Get started and download your free economic report today.
So it's some really shocking news coming out of China. And, so China, of course, had these really draconian COVID lockdowns where they shut down entire city blocks and apartment buildings, just locked the doors and these kind of things, and have just shut down everything, zero COVID policy, right? And so as that policy is ending, everyone expected, okay, Chinese economy come roaring back. Well, the Chinese economy is incredibly slow right now, and it's in the doldrums. They just showed the economic growth at, I think, 6.3%. For China, which is well below what analysts were expecting. There's all these stories coming out about youth unemployment rates. So the youth unemployment rates are running around 20%. People don't have, young people don't have jobs. And the issue is they don't want the kind of jobs that are available in China. They don't want manufacturing jobs anymore. They want jobs that are high-tech jobs. So a lot of these young people have gone to university, they've got their degrees, and they want these high-tech jobs. And there's very few of those. So there's a big mismatch in the workforce, the available workforce from the available jobs in China. And this is really a demographic problem too. So if you've been following...
Let's kind of pause there, because that's so fascinating, because you compare and contrast that with the United States, where we're at very low unemployment, and we actually have pretty massive labor shortages, right? China's kind of having the opposite problem, and especially in the younger employer segment. You said there's something like 20% unemployment possibly?
But there's still labor shortages. Okay, so the issue is they can't fill the manufacturing jobs, right? They don't want the whole influx. China's growth was driven by the kind of the rural workers, moving to the urban settings, and these farmers being trained in factory work, right? Well, there's not a lot of migration happening anymore. And what's happening is you're seeing the demographics of China are crazy. The number of workers over the next 75 years through the end of the century, the number of workers in China is slated to decrease by 2/3. So it means China will have 1/3 the workers it has today. Wow. I mean, this is insane. And their population will be half. That is necessarily deflationary, right? So gross domestic product is the measure of an economy, and it is basically, population is the main driver of GDP. So if you have, a billion people and their productivity per person is X, then you have a billion X GDP. So if you cut those number of people by half, your GDP drops by half. So this is their economy drops by half. So this is the big picture we're seeing. So they have this problem where they have these jobs available. There actually is a worker shortage, but they don't have the right kind of workers to go fill those jobs. And so we're seeing a pretty big mismatch coming there, slowing growth, higher youth unemployment. And that youth unemployment is a problem. You get a lot of disaffected, angry young people. Could we see a Tiananmen Square kind of thing again? Furthermore, you're seeing, China's imports and exports dropped by double digits. What? I mean, imports and exports dropped by double digits. So you're seeing their exports dropping. What's going on with that? Well, there's a couple things. One is the global growth impulse is slow, right? As the global economy is slowing, China has fewer goods they're gonna export, and if they're not exporting, they have fewer things they're going to import, as well as just their own slowing economy, less internal demand. The other reality is we've been talking about this reshoring trend, right? Where America, and other nations are saying, there's a wake-up call happened during the supply chain crisis of COVID, post-COVID. People said, wait a minute, why are we importing everything from China? We can actually make it better, cheaper, faster here in the United States. And there's a lot of examples of this, And so pretty much every single company that has, large American consumer base is looking to reshore and move their manufacturing back to America. Now,
one of the data points that you pointed out in our Investable Megatrends series that we've done is that the wage growth in China over the past 20 years is the fastest we've ever seen in human history. At least recorded, right? I think it's 15x.
15x.
Yeah.
And that tells you where the shortage is, right? So you have to raise wages. So what's happened, this reshoring trend is actually working. Over $1 trillion was spent in 2022 last year by American companies to reshore to America. And that's going to be continually happening for the next 15 to 20 years. So a massive amount of investment happening. Well, and that's starting to take its toll. And so one of the most shocking charts, I don't know if you can figure out how to pull it up here while I'm yakking, is that actually the imports from Mexico have just crossed over for, I believe it's the second month in a row now, where the imports to America from Mexico have overtaken the imports from China. So nuts. I mean, this has been absolutely insane, what's happening. So literally, China is no longer our number one import partner, but it's Mexico. And that trend is going to continue. And by the way, Mexico doesn't have the same kind of labor shortage that China has. So, there you go. Okay, so check this out. So the red line is imports from China, and the blue line is imports from Mexico. And they've just reversed here.
Yes, you can see for the past really 20 years, I mean, China has been one of our biggest, import relationships, our number one, right? And so Mexico's always kind of trending below that, but just this past quarter, it flip-flopped and pretty dramatically flip-flopped, not just a little bit.
Right. And so Mexico, one, it's closer, obviously. So there's none of these big supply chain problems. Two, Mexico has a much cheaper workforce. It's actually cheaper to hire a Mexican laborer than it is a Chinese laborer into these factories. Three, Mexico has an abundant labor supply, so they don't have this demographic crisis. So if you remember the one-child policy in China, I mean, basically they have lost their young people. Their workforce they just don't have a youth workforce. It was 350 million forced abortions, and the ones that did survive, the ones that made it, are primarily male, so very much male dominated, and so there's not enough women. And women are the ones who have children. And so they have a major demographic crisis of their own making. So what's happening, it's starting to affect the economy. Meanwhile, I mean, so you've seen the the trade wars happening, where more and more business is going to countries like India and Vietnam. So India, of course, speaks English as a semi-native language, and Vietnam is much cheaper than China. Now, they don't have the same infrastructure. India doesn't have the same level of manufacturing infrastructure that China has, and neither does Vietnam. But you're seeing them competing where they can compete and taking a lot of business away from China. And then the final piece of this is, if you've been watching any of the news coming out of China for the last, let's say, year to 2 years, Xi, the premier, is really become a strong man. I mean, he has become very much like a Stalin or something, just extremely heavy-handed. He's purged anyone who doesn't agree with him, and he's basically taking over the country and turning it into a dictatorship. Well, they've gone after business. So they've shut down a whole bunch of IPOs. The Ant Group's IPO was going to be a big IPO. The DD Group, they've run anti-business campaigns against various media, education, and other kinds of businesses. And so what happens is all of his business confidence is just rocked. So people they don't know if they can invest in business anymore because they've been so attacked by the government. And so you see business confidence rocked, Chinese consumer confidence is rocked, and so that's slowing internal demand. So businesses buying stuff and consumers buying stuff is just like on hold. So you're seeing this is really, it's the beginning of the beginning. We're going to see China continue to have issues for the next 50 to 75 years, primarily demographically driven. But it's going to create a huge ripple effect throughout the world, because China is the world's second largest economy, and they honestly don't have the same future that we thought they had. They just don't.
Yeah, this is a huge deal because, one, it's not getting the same kind of coverage that some of the other things get coverage, right? And many people that a lot of times have a vested interest or a bias that is driving their opinion on China, right? And China's going to overtake the U.S. and our nation is kind of on the decline, and China's rising over the
ascendant,
kind of ascending. But it's really not the case. I mean, if you play out, it's really I mean, I think they're pretty much beyond the point of repairing their demographic issues. I mean, they're
no, they can't be repaired. So it's set in stone. Yeah. There, if you have X number of people of childbearing age, that's it. And you assume they're going to have 1.15, maybe they have 1.3 children per woman. You can predict exactly mathematically where their population is going to be. With very little variability, and there's nothing they can do. They set their future when they implemented this one-child policy, and when they rapidly urbanized. Those are two things that stop the birth rate. So the birth rate is they urbanize. So it's set in stone. This is going to happen, and it's like a slow motion catastrophe happening over the next 50 to 75 years. You're going to see lots and lots of negative news pretty much every decade, twice a decade, coming out really negative things happening that continue to undermine China's growth in the business world and the economic world worldwide. And it's going to create ripples. So some of the biggest concerns I have, if you've been tracking the property bubble in China, which I have some, and there's been a massive property bubble in China, both in residential, but as well as commercial kind of real estate.
And bubble just meaning prices going sky high.
Prices going sky high. Well, okay, and if you have if you're losing over the next 50 years 2/3 of your workforce, how many factories do you need? Right? And if you're losing half of your population over the next 50 to 75 years, how many new multifamily apartment complexes do you need? And so what's happening is there's going to be demographically driven softening demand. Now, a lot of people think demographics, it's like put me to sleep because it's like watching a glacier move down the hill, and you're right. But at the same time, glaciers shape the valleys, and shape everything about our landscape. And that's exactly what's happening. So you're going to see softness in demand. At some point, you're going to see a Chinese property bubble burst. And, now can the government, the People's Bank of China, do something? Well, they can try, they can do things. But honestly, they're not that clever. What's happened is Xi necessarily, when you create a one-person state like this, you necessarily get rid of competence, right? You get rid of, the idea of, surrounding him are not people who are the brightest stars. They're the people who are the most loyal, right? And the most, just telling him what he wants to hear, right? Yeah. And not challenging anything, because you don't get ahead by doing that. You lose your head by doing that, right? So what's happened, they become really incompetent in their ability to respond to anything and lead. And it's just strong arm tactics. So China's in trouble. I believe they're going to probably have a property bubble. And what that means, a collapse like that would affect the banking sector, where they have to prop up the banking sector, and it could have global implications. I don't think it's going to affect America very much. I don't think probably, Europe has a big trading relationship with China, so it remains to be seen, how much really what the global effect is. The other big thing that I'm thinking about is, we've been tracking oil for quite a while, the oil industry, and you're seeing oil production just steadily dropping and declining, and you're seeing and it's not being replaced because companies have not been investing. You have to reinvest billions and billions of dollars every year to continue just to maintain your oil production, and it's not been done for the last 7 years. So we're watching this, and then the question is, when is demand going to go above that? And with China on a slow growth, we're seeing probably more time where we're going to see demand continue to be soft for a while. So what's going to happen, as soon as demand, there is any kind of growth in demand, you're going to see oil prices spike, because there is no additional supply to be had anywhere. Right. So we'll see what happens. It could be we have softer oil prices, barring, kind of global kind of, geopolitical event. You're going to see probably softer oil prices, which is good news. It means we can continue to buy oil production at very cheap prices for a while. But those are some things I'm thinking a lot about.
Yeah, awesome. Well, hopefully this was insightful. And as always, we shared this a few times on this segment of our podcast, especially. If you have things you're reading or questions that you're pondering, we a lot of times have been responsive to listeners' emails or write-ins. You can do that at thebillionairepodcast.com if you want to get our insights on some things that we may share in a broader way on the podcast. And if you are enjoying the podcast, please help us spread the word and share this. And it really helps us if you leave a review so that we can continue to get this in front of more people and share the things that we're seeing and help people become better investors. So with that, thanks so much for tuning in, and hope you listen next time.